Aloha, everyone. Joshua Hayes at BigWaveTrading.com. Sorry for the late weekend video, but wanted to watch March Madness first off. All the games are done. But more importantly, I wanted to see how futures initially traded following the opening and what we saw the past week. And so far, so well. But I got to be honest, to be completely confident that we were going to stay green, I think that we need to be up at least 1% by this point. Um, what time is it in New York? It's 9:11 p.m. as I make this video in New York right now. And I would just think futures should be up higher. That being said, at least the NASDAQ 100 is now up 0.5%, and the Russell 2000 is up almost 0.60%. So that is at least a positive sign as we move in to the trading session on Monday. Now, really quick, I'm going to go over the sell signals, the end of day sell signals 100%. But we just want to make mention that we're now at the 200-day moving average on the S&P 500. The next important resistance level is right here. Really quick, though, I want you to notice this price point here on the S&P 500 and where it's at now. Keep this in mind. We're going to need to reference this later on when we look at the New York Stock Exchange advanced decline line. Looking at the Dow Jones Industrial Average, you can see it also crashed right through that support level. It's coming in at the second support level at the 200-day moving average. Also notice where it looks like compared to the recent lows. Keep that in mind for the next time we look at the NYSE advanced decline line. The NASDAQ and NASDAQ 100 looks a little bit better. They have closed below the recent lows. And as you can see, the next support levels are the 200-day moving average and the support level on the NASDAQ. But there is relative strength in this index compared to the big industrials that seem to be getting hit more on the trade war worries. Most impressive, though, is the Russell 2000. Not only is the Russell 2000 still above this support level in the 200-day moving average, it's still above this support level. So that's positive divergence in the small caps. And what you're seeing here with this uptrend line right there is the main reason why, despite the sell-off that we just saw the past week on Friday, less than 10% of all of the stocks I'm long and tracking, and it's over 200, registered 100% end-of-day sell signals. Now listen, I know I track a lot of stocks. I'm insane. I still put a lot of capital per each position. Overall, that to somebody else would be probably a larger size of a smaller sized account. And I have all of the hours in the world after the market closes before the next day living on Maui, so it's different for me. And normally I recommend traders do 10% of your capital, 10 stocks, never risking more than 1% of your capital per trade. In this market right now, though, I wouldn't go more than 5% in any one position, and instead of risking only 1%, I would max your total capital drawdown to 0.5% right now. You got to be careful. And on that note, I have one new long position. Ignore it. Please ignore it. It's in my perfect speculator scan. I've seen perfect speculator scan stocks that are in the midst of takeouts or buyouts that continue to move higher and produce gains before the final takeover comes. The new long position is in that case, but the stock is extremely illiquid, thin, wide bid-ask spreads intraday when it is open, and it's a complete arbitrage play on a takeover. And my idea is that it's going to get a higher takeover bid, so the stock's going to go higher. But it's too risky. I know it says 1% on the website. Ignore that. It's going to be less than that. I'm not sure. I want to make it an even number, like 10 shares, 100 shares, 90 shares, 10 shares, 20 shares, 30 shares. 1,000 shares, 1,500 shares, you get the picture. A nice round number. So I'll decide what I want to do when I cross that bridge in the morning with the total account capital. But the stock is so small, ignore it. I just want to be fully transparent, let you know what I'm doing because I'm a madman. It was in my perfect speculator scan, so that's that. But the market looks a bit rough here. But before we get, too bearish, let's get back to the indexes. So right now, as I make this video, the S&P 500 is up 0.42%, NASDAQ's up 0.50%, Russell 2000 up 0.60% after hours. But the overall price action in the market, as I said, we're coming to the averages. But look at where we're at on the RSI. We're at oversold levels. Lately, since the uptrend started, in 2016, the early 2016 lows were in. When we get oversold, we bounce. Now, it doesn't mean we can't have an intraday collapse before we bounce, even flush out below this low. But my theory is while it's never too late to sell, it might be too late to sell after 9 straight down days, waterfalling to major support levels. So while I'm not completely bullish here. I would expect a bounce. The news headlines are extremely bearish. But that being said, until there's a follow-through day, or in case we really do intraday flush below these lows and have a huge intraday reversal with my RSI getting below oversold and this MACD line getting back to where its last previous lows were. Remember, this is rolling over too quite harsh, so there's no signs of a bounce. There's no curling in the RSI or MACD, so just to expect Monday to be an up day is silly to dumb. We could easily crash Monday. But the S&P 500 for now, at that support, we're at oversold, so we'll see what happens, make or break point. Dow Jones Industrial Average, very similar situation, near oversold. MACD at oversold levels, but still there's no curl. Histogram is in confirmation. We're just waterfalling down. Like I said, you don't want to catch a falling knife here, but I would think that if you haven't sold already, it doesn't make a whole lot of sense to sell now on the Dow Jones Industrial Average. But at the same time, I wouldn't write it out, so you might want to buy puts to hedge a position. Let's say if you are long like 5,000 shares of Caterpillar, you might want to buy 50 puts. So, it's just something to consider just in case we do break wide open this upcoming week. But like I said, I don't know if that's really going to happen. Same thing though, NASDAQ, waterfalling, histogram, RSI, complete rollover. Everything looks pretty bad. So until we start to see a bounce, I wouldn't be too sure that we've bottomed at. And unless we see a bounce from deep oversold conditions, huge volume on the intraday reversal, like an intraday reversal like this, but on the highest volume ever, I wouldn't think that a one-day bounce is definitely the bottom. I would wait for a follow-through day. But still, NASDAQ showing relative strength. That's good. And the best of the best, the Russell 2000, like I said, I love how it's still above this support level right here. And that's why we're still along a lot of stocks that are moving higher. I mean, just this weekend, look at ADAP. That's new closing highs. ADMA, that's new closing highs. CDNA, that broke out as an earnings winner. QHC, the market maker, cancels my limit order every session. And look at this one just run to new highs. So it isn't all dire out there. ESQ, you can see, is hitting recent highs for me. So it's kind of hard to be completely bearish out here when I still have stocks that look like this. I've been through many, many downtrends where none of my stocks hold up, or the ones that do is less than a handful. About a quarter of my stocks were higher by the end of the day, the ones that didn't trigger full sell signals by the close. On a pretty ugly flush day, that's something else to be said. So the reason why I think that also is the case, not only is there divergence here in the Russell 2000, but look at the New York Stock Exchange advanced decline line. Now, you remember what the S&P 500 looked like? Let's just go back over here. Look at the S&P 500. There were those lows, and there are these lows, the rollover. Well, the New York Stock Exchange advanced decline line, which is basically S&P 500, it's the New York Stock Exchange, but basically it's the closest reflection we have of the S&P 500. It only barely cracked to smaller lows. So this shows that overall, this weakness in the downtrend, this is positive divergence compared to the RSI and the MACD rolling over. As if we can bounce and this line has a big turn higher, we may see a very good tradable bounce. But just to let you know, this is positive. Now, if this line was lower than this line by a lot, or even lower than this line, I would say, oh God, we are going to possibly crash. Never know, but I would think I'd be more on the crash camp than I am on the bounce camp. It's still early, like I said, but this is a slight positive development. And even more importantly, I noticed this weekend, the put-call ratio spiked to 1.54, the total put-call ratio. That's much higher than the recent lows and is overall extremely high. Let's go to a weekly really quick and look at where that's at. And as you can see on a weekly basis, going back to 2016, remember the lows that I talk about in 2016 that I traded off of what I consider the last real pullback. I don't consider that 10% crash we had to be a real one. It was all the way back here. You can see the put calls even higher. So that's something there. Let's see if I can even go out further. Let's go out 3 years. Let's update it for 3 years. Yeah, now we're at August 2015 levels. So, there's a lot of fear out there. The CNN Fear and Greed Index is at 7. It's not at 0, but it's at 7. So, we'll see what happens. It's just hard for me to be too bearish here near these support levels. But at the same time, I'm prepared for anything. I have my stops exactly where I need them. And on that case, let's just really quick over the full sell signals. VKTX, it took out my final stop right here. That's where my final stop was. It was knocked out. I was knocked out of it Friday. If you're still long, you move your final stop to 454, 1 cent below today's low of day. VRS, the unfortunate trade of the day. What's happening? Okay, there we go. VRS, that's an immediate failure. I didn't like that it wasn't closing as strong these 2 sessions, and Friday's price action confirmed those weak closes. It's unfortunate, but that's what happens in a weak market. You can't win them all. GSVC, strike that up to a bad trade. I'm already out of 75% of it. I had a final quarter stop here. That now gets moved up to today's low a day. Getting back to VRS, I was not knocked out all of it. I had a final stop here at 15.11. So 15.11 had a final stop. That now gets all moved up to 15.92. I forgot to mention that. HGV, I was completely knocked out of it intraday on Friday, but this is, like I said, we only had less than 10% of full sell signals on Friday, but by the end of next Friday, we could have 90%. You know how that happens? You just have this happen. Confirmation close below the 50-day moving average on above average volume in red bop. Doesn't matter how long a stock's been in an uptrend. If it already has a nasty crack on huge volume in red bop, cannot take out the intraday high of the day and then closes below its 50-day moving average 2 days in a row, closing below the previous session's low a day, and especially that support low a day, that's always a 100% sell figure. I was knocked out of HGV on Friday, but if we see more of these this week, I'll quickly raise a ton of cash as I'll be raising stops on everything. I have a lot of stocks where I have like 10, 8, 6, 5 stops on. You get a move like this, all of a sudden I have 1 or 2 stops. That's how quickly I can move them higher. But HGV, that's a full sell signal. CM, a close below the 200-day moving average on above average volume. That will forever has been and forever will be a full sell signal. So CM is a full sell signal. I moved my final stop to this low, and I was completely knocked out here at the end of February. CADE, that's it. Closed below this low day right here. That is a 100% full sell signal. I still had one final loose stop here. It's comical. It was only 3 shares. All 3 shares, almighty 3 shares. Remember, I was fully invested when the signal triggered. Goes to today's low a day. So 3 shares at that low a day. TPL closing below the signal date's previous support right there. That is a 100% full sell signal. That actually hurt a little bit for that one. That's 100% full sell signal, on the ad signal, not the complete signal. I didn't write that one down right here. It needs to close, but you can have a close below the 50-day moving average and above average volume 2 days in a row before this support level is taken out. But if this support level is taken out right here, TPL will be a 100% on a full basis. That's for the ad signal. Right here, it's a 100% full sell signal. SYBT, there it is. Confirmation close below the 50-day moving average on above average volume, and also closing below these support levels right here. The long signal is here, so that is a 100% full sell signal. NBIX closing below the signal date's low of day after completely rolling over and erasing the gains. 100% sell signal, already completely out. BY, boo, what a start. Went long here, added to it, boom. Breakout, but then I had this day, moved up one of my stops to right here, got knocked out for a small loss, had a stop here, had a stop here. Those got taken out on Friday. Still had some loose stops back here. All of those get moved to today's low a day, or Friday's low a day, 22.14. HEES closing below the signal date support level. That's a 100% full sell signal. That was my final sell stop level. So that was taken out, all out of HEES. SLP closing below the 200-day moving average and above average volume. I've already been knocked completely out back here when it closed below this lows. If you're still long, goes to 5 cents below the low a day because this is a 5-cent stock. IPGP, that's a full fail. Closing below this low day right here, which was 234.01, so it's a 100% sell signal. I was knocked out of all of it on Friday. GNBC, that's always going to be a full sell signal. Heavy close below the 200-day moving average, even though volume's below average with the red VOP and the choppy price action, and basically looks like a head and shoulders top. That's a full sell signal. I was knocked out of it all intraday back here. And then form, fail, I'm all out. Pets, fail, I was already out. Back here, I think I moved my final stop loss to here. Was knocked out here. Still tracking on the end of day basis because it's not closing below the 200-day moving average. Now we're all out of it. And that is all the sell signals. This is another long video lesson, but it's very important that we went over everything we went over. Hopefully some of you guys on the East Coast can still watch it tonight. It's pretty long. Maybe speed it up to 1.5 times the normal speed. I wonder what I sound like when you do that. 2 times might even be more hilarious. I might have to try that out once. But either way, I hope you guys watch this video lesson and are prepared for Monday's session. Anything can happen, and as it looks right now, it looks like we're going to gap up. But my inclination is my trades are going to be puts, looking at resistance reversals, unless we just explode higher intraday with no signs of a pullback. Then I'll be looking to buy calls on dips until I have to go to sleep. I live on Maui. I can't stay awake all night and live a halfway decent normal life, but so far we're looking pretty good. We'll see how we do on Monday. Aloha, everyone.